You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern Time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What product's going to make it onto the show? We got to tune in every week. Maybe it's energy, maybe it's metals, maybe it's rates or ags or dairy. You never know what's going to float on there. Equities, you got to tune in every week to find out. Of course, if you follow us or CME before the showtime, we will tweet out the movers and shakers report, give you a little bit of a hint right there. And of course, you guys, as always, can run all of these reports for yourselves pretty much anytime throughout the week over there at cmegroup.com/TWIFO or /TWIO, TWIO, two places for you guys to go. You want to check This Week in Futures Options report for fluid milk at 3 a.m. on a Sunday? No one's going to judge. You know where to go, cmegroup.com/TWIFO. And let's see who we've got joining us in the CME and FTSE Russell hot seats today. Our old friend, Mr. Dan GRAMZA, the president of GRAMZA Capital Management, joining us here for the first time in the new year on TWIFO. Mr. Dan, welcome back, sir. It has been too long.
Well, thank you, Mr. Mark. Great to be with you. I'm really excited about exploring some of these markets today. Interesting things going on, and I think a fun market environment in terms of what's happening and what the expectations are as well.
Really quickly, since this is your first appearance with us here in the new year, the mad already year that is 2022, Mr. Dan, really quickly, looking back on the insanity that was 2021, what stands out for you, sir, amongst all that madness of the year?
Well, I think a few surprises. Crude oil surprised me in 2021. Copper, also, I was looking for more action, and now we're starting to see it. That was another market that really did kind of surprise me. The dollar struggled, and it's going to be interesting to see how it positions itself and the stock indices themselves, how they're reacting to now the beginning of the year, but how we finished up in 2021, I thought was a positive step in the right direction.
Well, let's see if this show is a step in the right direction. You know how we kick it off, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers. We break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. Mr. Dan, you know what comes next. Where should we begin our journey this week, sir? To the light side or to the dark side?
I think we should start to the light side. Some interesting things going on there. So let's give that a go.
There are indeed. If you check out the report for yourselves, listeners, you'll see it is roughly 50-50, a light side to dark side this week, even though the magnitude of the movers, well, I guess you could say they're roughly equal, even though once you get to the middle of the pack on both, there is a little bit more action on the green side than on the red. But we shall start to the light side as requested, sir. Number 5 to the light side this week, getting another lift out there from all the madness going on, is WTI up another 6.54% this week. Doesn't seem like it was that long ago we were talking about negative crude oil, and now here we are up another 6.5%. Number 4, our old friend Lean Hog, 6.71% to the north. It was number 3 in the dark side direction last week, off 4.88%. Number 3, soybean oil, up 6.81%. Number 2, SRW wheat, so good old Chicago wheat, up 6.9%. And number 1 this week is platinum, up 8.39%. Let's go to the dark side now, and we've got number 6, just barely missing the bottom 5 this week. We got the Russell 2000 off about 2.5%. It was number 5 last week, off a mere 0.87%. That shows you how light the dark side was last week. It was all green on the screen last week. Number 5, our old friend lumber. Actually, a bit of a snoozer for lumber this week. Only off 3.17%. If you've been listening to the show for a while, you know lumber can move 20 to 30% in a week. So 3.17% is a bit of a rounding error for them. Number 4, the Nikkei, yen-denominated Nikkei. That's been kind of popping up there a lot lately. Unfortunately, again, no real options to speak of out there, but Nikkei yen off 3.7%. Number 3, we got the soybean meal. So back to the ags, but in the other direction, off nearly 4.5% this week. Number 2, you knew it had to be in there somewhere. It was at number 2. It's nat gas, off 10.89%. And number 1 with a bullet this week. Again, we had to have Nick on our pro Q&A. He's mentioned sometimes there's some aberrations with the euro dollar. So it's showing a pretty aggressive print to the dark side with the euro dollars. We'll have to check with Nick to see what he says on that one. Speaking of checking, really quickly, we haven't done this in a little bit, but we had Derek Salmon on the show not too long ago, and he's a big fan of the CVOL numbers. And, you know, interestingly enough, you guys can also run this report for yourselves. If you go to CME Group and CVOL, just type those into your browser, CME and CVOL, you'll get this. If you see at the top of the page, you can play with the range there. So you can run your own reports there. And if you go to 1 week, we can kind of do a 1 week check-in here on all things CVOL. CVOL, of course, CME's aggregate volatility indices across a wide variety of products. They do it for treasuries. They do it for FX. They do it for metals. They do it for energy. They do it for ags. And pretty much the moral of the story across most of the products over the past week from a CVOL perspective is vol is down. Vol is coming in. Vol is coming in anywhere from 0.5 point to 2 points, 2.5 points actually, on the treasuries. The biggest move we saw on the treasuries from a vol point perspective was on the 10-year, off nearly 2.5 points. We have, let's see, going out to Eurodollars, the vol was off 6 points out there. FX, kind of a bit of a sleepy time, as it usually is in FX. The biggest move we saw was 0.5 point in the Canadian dollar to the US dollar out there. Metals, vol was up, the biggest vol gainer, 1.38 points in silver. Vol down across the board in energy, in particular nat gas. CVOL down 7.1 points to a 57.30 in nat gas, and vol mostly up across the ag sector. The biggest vol gainer out there is soybean oil in the ags, up 4.75 points at about a 32 $1.39 out there. But Mr. Dan, it's on everyone's mind right now. I think we got to start in the energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. It's that time, listeners, to get on into energy. You guys know where to go to access these reports for yourselves. CMEgroup.com/TWIFO. Then get on into the drop down, go into asset class, and go into energy. And let's see where we begin our story, because, Dan, a lot going on in the energy space. We have, of course, news of unrest out of the Middle East. We have Russian troops poised on the border of the Ukraine, so threatening nat gas. A lot going on. What's catching your eye out there in the energy markets as we kick off this new year, sir?
Well, I got to tell you, either one is, there's a story behind it. And I guess let's start with crude. What amazes me about crude is where we're trading. I really felt that last year we wouldn't see much of anything above 80. And I know some firms are out there looking for 100. And who knows, this year we may get there. I just don't see the right mix. In other words, the fundamentals and the technicals, if you look at the price action, I don't think fit together in the crude oil market. It's not really a supply-demand issue. What have we seen? Do we see increasing demand in Asia and in Europe? Yes, we do. But is it a supply issue? Is there not enough supply in the world to meet that demand? I don't think that's the issue. We're seeing inventory, our crude oil inventory built again this week over 1 million barrels. The supply is there. The distribution, that's another issue. But I really feel apprehensive about prices where they are. Now, in my daily video, I showed this being a long position, the concept being long. But the idea behind it is, from my point of view, I'm really, I wouldn't say bearish, but I'm skeptical of the current levels. But price dictates what we do from a trading point of view. I have an opinion, but that doesn't put money in my pocket and take it out. Price does. And if this market wants to go higher, well, then I'd want to stay long. However, with the action that we saw yesterday and what we're seeing today in the Feb crude oil contract, I'm cautious about. I don't think this is a layup on the long side. Nothing telling us to abandon ship. But I'd be very cautious on the long side at current levels in crude oil. And nat gas, shall we talk about nat gas, Mark?
Let me first break down a little bit of the action here in crude oil. Since you brought it up, sir, I already had nat gas up. You jumped into crude oil. We'll go with crude oil first. You're the guest, sir. You get to pick where we go. So going into that drop down, listeners, and go into energy, then go to WTI. You'll see we're coming into showtime now, almost 85.5, 85.41. Dan, it doesn't seem like that long ago that we were inverted in crude oil.
Yes.
And now 85.5. Yeah, I'm with you. These levels are something else. Hey, we were just talking about this on our option block show not too long ago, too. It wasn't that long ago as well. We were hearing the argument that crude oil being too cheap is bad for the market, right? Because it's going to hurt all these energy companies that can't afford new production, new wells. It was going to drag on the economy. Now, of course, we have the flip side of that, which is oil is too expensive. It's going to drag on the economy. So I guess we can't win in either extreme, Dan, when it comes to
Mark,
crude oil.
that's an excellent point. Go ahead. I'm sorry.
Well, it's fine. It's fine. Let's get into all the madness here in WTI this week. Like I said, 85.5 right now is roughly where we are, up about a little over 2 points, about 2.5 points, or 2.5%, 2.1 points this week since Monday. In terms of the action, and there's a fair amount of action out there this week, almost 450,000 contracts on the tape out there in WTI. And of that, nice and refreshing. It's not an equity. Doesn't do all of its paper with 1 day to go. It's the March contract with 27 days to go. That's doing 39% of that over 400,000 contracts. Let's look really quickly. The vol out here, like I said, vol mostly coming off across the board here this week, and WTI is no exception. At the money vol in WTI right now, about a 36.5, off about 1.5 points this week. So that kind of puts it, if you're looking at your equity vol frame of reference, obviously we're seeing VIX floating a little bit north of 20, RVX and small caps a little bit higher there, mid-20s, and obviously crude oil roughly 10 points higher than that at about a 36.5. In terms of skew last week, the puts were where the action was, 7% bid. This week, coming down a little bit, only 4.4% bid. So extended rally, taking some of the steam out of those puts. The calls last week, 3.4% cheap. This week, swinging all the way in the other direction, now 3.7% bid to the at-the-money vol, which is already decently rich at about a 36.5. So you're paying a decent premium to get those upside calls, yet folks are clearly doing it. In fact, the most active contract this week, again, Dan, listen to this. It's the 90 strike call. Doesn't that sound insanely rich? We were just talking about not long ago the 40 handle. Can WTI stay above the 40 handle? Now we're talking 90 calls, Dan. Isn't that nuts?
Oh my gosh, it's amazing. And it really does say something. I like the way you presented that, Mark, because it does say something about people's beliefs. It does say something about expectation, right? The shift that we're seeing between the puts and the calls, logical. We have a strong uptrend the way it's behaving. So the puts kind of dampen down a bit. But you know what's interesting to me on that? That means those puts could be priced attractively. So from a technical point of view, if we would trade below 85, I would want to be on the short side of that market. And that also means those puts may be relatively cheap at that point as well, too. But remains to be seen what this wants to do. But yeah, I agree. What does that 90 say? But if the expectations are 100 before the end of the year, well, maybe 90 is not going to be that unreasonable the next time you and I talk. But again, I'm very skeptical of the market at these levels.
Yeah, 90 handle. It sounds rich. But here we are, 90 handle doing 90 calls, doing almost 16,000 contracts for the number one spot this week, listeners. The big day was Monday, 7,100. Obviously, Tuesday, because it was a shortened holiday week. No Monday action this week. Number two was Wednesday, 4,500 contracts, and today 4,000. It seems like mostly back and forth. No bias to opening or closing really either direction. So a lot of back and forth on that 90 strike. As we get closer, then retreat. It makes sense over there. Then number two, right behind it, we have, looks like it's the the par calls, the 100 calls. Again, these used to be wildly optimistic. Now they're within spitting distance, doing about 10,000 contracts this week. The big day, Tuesday there as well, about 4,500, 3,500 on Tuesday, and only about 1,600 today. So a little bit lighter paper today. And we got 75 puts going up 8,000 times this week, and 95 calls were actually number three at 9,400. The big day, also Wednesday, 4,000 of those, 3,000 on Tuesday, 2,300, followed by the 75 puts. So it's not all calls all the time, it's just mostly calls. About 8,000 of the 75 puts went up this week. The big day for those was actually a tie between Tuesday and today, both at about 2,900. So intriguing stuff out here in WTI. I got the feeling we're not done talking about WTI here this year, listeners. We'll be back on this one again, where we got to go to the other side of the energy equation, the place, Mr. Dan, where they have troops poised on a knife's edge right now as we speak. It's the nat gas market, sir. What is lighting up your tape in the world of nat gas this week, sir?
A mystery, Mark, a mystery. Because what we're seeing in nat gas, I don't follow in the regard of logic. If we think about where we are in nat gas, we're trading below $4 right now. And if we think about supply and demand, we think about pricing, we think about the fundamentals like you just mentioned with Russia. And Russia and the Ukraine's a big deal because there are two pipelines that feed nat gas to Europe from Russia. The one going through the Ukraine, which they have used as a political weapon before, and the one they have going to Germany. Now, there's a Nord Stream 2 line that's completed, but it hasn't been opened yet. They're not allowed to open it at this point. So, yes, it has been held as a hammer over Europe. If we look at where they get their nat gas, they get 20% from Norway. You know, Norway produces a lot of natural gas. And for Norway, they don't use it to produce electricity because they produce their electricity 90% by hydroelectric. So they sell a lot of nat gas, again, about 20% of European supply. The other variable in here, which didn't exist just a few years ago, was the ability for the United States to sell nat gas to Europe. The challenge was we really didn't have export facilities and they didn't have import facilities. Germany, Poland, they now have import facilities for nat gas. And in the United States, we have some built and we have a huge, down in Texas, I think it's Corpus Christi, but down in Texas, they have a gigantic multi-billion-dollar facility to produce LNG. Because, as nat gas, it's a volatile little molecules bouncing around, which is why it's in a gas form. But if you squeeze the heck out of it under high pressure and low temperatures, it slows those molecules down, and now we have a liquid. But it's got to be transported under that pressure and those low temperatures. So it does take special handling. And we're getting facilities built, and we already have built to now export some of that product that we have. If you look at what we see also in the United States that's changing for us is our ability to capture it. If you go by a refiner, or if you go by a production facility, where they're producing crude oil, for example, and you see a big tower with the flame on the top. Well, they're flaring off something, and usually it's nat gas because they don't have the ability to transport nat gas to where we can use it. And we're seeing that changing. There are pipelines being produced and have been produced in the Permian Basin, for example. So Texas and eastern New Mexico. So now we're capturing more of it, which is what the industry does want to do. And if we think about what's happening globally, geez, I mean, look at our friends in Europe. They're paying what we're seeing for $4, they're paying $25. And if you look at Japan, they're paying $28. So there is a bit of a spread here between what other countries are paying and what we're using here in the United States. Here's what fascinates me. Now, we hear so much about weather when it comes to nat gas. We want to think about how is it used here? We use it three ways, basically. One is to heat our homes and cook our food, primarily throughout the United States. Nat gas is used for that, and that's about a third of our consumption. The northeast part of the United States still uses some heating oil to heat their homes. Now, let's talk about the other uses. Another third goes to industry, a chemical industry, steel industry, large consumers of nat gas. The last third goes to produce electricity. And we saw problems last year in Texas when they couldn't produce electricity and what it meant to their whole economy and to their structure from a quality of living point of view. So nat gas comes into that area. And the demand that we're seeing, does weather have an impact? Yes, but it's not the only variable you want to think about. All right. So that being said, wouldn't you think that nat gas would be $6, $7, even double digit? Yeah, when you think about global demand. Where are we? We're at 380. We're way below, at least where I thought we'd be by now. So what does surprise me is the way we have softened. We got up around 490 and we found sellers, and we really haven't turned back since then. So what's driving this lower is kind of a mystery to me, Mark. I just don't see the fundamentals supporting this price action. But we're not seeing any paper coming in from the buyers to support it at this level. There's nothing, I don't think, telling us to be a buyer of nat gas at the current levels. Now, one more thing, and that is around 350 if we get back down there. And we were there just, towards the end of the year. We have that possibility of getting back down there. There, we did see some price action on the buy side. And I think that was more hedging than anything else, because that is something that you and I want to keep in mind, I think, when we look at these markets. And that is, where do the hedgers typically come in? And I think that would be an area to pay attention to. So between 370 to 350 would be an area would be logical for buyers to come back in.
I like the way you put that, a mystery, Dan, because you're right. If you ignored the markets for a second and just looked at the broad trends of what's going on in the energy space right now and the macro geopolitical headlines, Dan, you probably would not assume we'd be off nearly 11% this week, right? We have Russian troops poised. They could be in there right now as we speak, for all we know. You know, there's a lot going on specifically when it comes to the nat gas side of the fence that you'd think would keep things a little bit frothy, a little bit frosty out there. But yet you're right. At the end of the day, more sellers than buyers, Dan. You can't overcome that. And that's clearly what we're seeing out there right now. Nat gas coming into showtime. That front contract that goes out in 6 days at about a 381. You go a little bit farther out. You go out to March, where the lion's share of the paper was this week, 37%. That's at a 365, so that's even lower. By the way, how much paper do we have this week? Actually, surprisingly light, only 317,000 contracts. Again, it is a shortened holiday week, so that's probably what's going on with that. If we had, you know, a normal length week and normal amount of trading days this week, given everything else that's been going on out there, we probably would see a more seasonally and indeed headline appropriate 400 plus thousand contracts on the tape, but not so much this week, a little bit lighter due to the holiday. Let's see what was popping off this week, though. It was the March contract, 37% of that roughly 320,000 contracts this week going up in the March contract. It has about 34 days to go. So people are obviously playing in the near portion of the curve, not so much in the contract that's going out in 6 days, but in that front portion of the curve, because, again, that's where all the action is. That's where you want to be right now. You want to have some gamma for the nat gas market because it's moving and because things could change on a dime out there right now. So you don't want to be stuck probably in a DC contract right now. You want to get a little bit closer to the fire out there, and that's what people are up to. What's the vol out there in nat gas? Also, nat gas vol just crashing, cratering out there as we speak, off 14 and a quarter points just since Monday, down to about a 47.5. So the vol is still frothy. It's still elevated. It's over 2x what you're seeing in, let's say, a VIX right now for an equity vol perspective, and even over to 10 points more than what you're seeing in a WTI, another energy product. But still, it's come in 14 points from there, listeners. That's a lot of vol to come off, given everything that's going on out there, as Dan was saying. Skew-wise out there right now, last week the puts were 4.4% cheap. And now that we've blown through some strikes to the downside, listeners, those puts are a heck of a lot cheaper. 16.5% cheap to the downside there. So maybe if you want to scoop some more downside in WTI, I think this downside has some legs. Maybe this isn't your worst week to do it. The calls last week, 7.5% bid. This week, 13%. So skew-wise, it seems like people are prepping and preparing for a reversion, a bit of a move back to the upside. Again, we have not seen that this week. We've seen pretty much naught but downside. Again, if that news changes out of the Ukraine border there, that might be a different story. In terms of, let's see, the most active contract this week, I said we're at about a 365 in that March future, 381 in that Feb future that's going out in about 6 days. Let's hang out in March. And let's see, it's the March, looks like the March 3.5 puts, which are close to at the money puts right now, that are leading the dance this week with about nearly 12,000 contracts going up this week. And that is far and away the most active contract out here this week. 3.5 puts, about 12,000. The most active day today, nearly 7,000 of that 12,000 going up today. The rest of the week, pretty much evenly split, 2,500 on Tuesday, 2,500 on Wednesday. Slightly biased towards opening on Wednesday, but that's really about it. We also saw about 11,000 and change of the 3 3/4 puts going up this week as well. The big day again today. Actually, take it back. The big day was yesterday for the 3 3/4 puts, but only slightly. 42.85 on Wednesday, 41.13 today. So barely edging it out. But again, the day is not over. Today probably will be the number one spot by the end of the day. And Monday, 3,200. Again, most of that earlier in the week biased towards opening. Maybe a bit of a rolling down from the 3 3/4 strike to the 3.5 strike. And then right behind it, we have almost 11,000 of the 4 calls, 10,786 to be precise. The big day again today. Today's where the action is in nat gas. 5,300 today, 3,700 on Wednesday, and about 1,800 on Tuesday. Not a lot of bias in either direction from an opening or closing perspective. So 3.5 puts, 3 3/4 puts, and 4 calls. Again, all strikes right around the at the money. Let's look a little bit farther out, see if we see anything a little bit more aberrant. Let's see. In terms of crazy strike, we see the 5 calls going up out here in the June contract, 3,200. We're going to be still north of 5 in the June timeframe, listeners. Who knows? Interesting stuff. Normally people would probably say no, that's outside of the seasonality of nat gas. But again, all that's out the window when we have what we have going on in that market right now. In terms of other action, maybe interesting. Also, the 5 calls were pretty active in March as well, doing 7,000 contracts this week. So, and most of that was actually all of that was on Tuesday, 4,400 on Tuesday, 2,000 on Wednesday, not much today. So the 5 calls trading heavily on Tuesday, the 4 calls trading heavily today. So intriguing stuff out here. Mr. Dan, any of that come as a surprise to you, or perhaps maybe alleviate some of your concerns as to the mysteries of nat gas right now, sir?
Well, I sure wish it would have, but no, it really has. I think what you're giving us a great point of view on with these different contracts, especially. I think it's logical when you look at the price action. So what you're giving us, I think, fits the picture that we're seeing price-wise, but it doesn't make sense fundamentally. Not when the big picture is looked at in terms of demand and the potential craziness, like you pointed out, with the Russia-Ukraine situation. So that part's still a mystery to me. And I like the orderliness that you've outlined for us in terms of where the bid and the offer is on these options with regard to price.
So can I read between the lines, Dan, and assume that's you gobbling up those June 5s right now?
I'm not out there in June. No.
That's a little bit farther out. But yeah, I can see what you're saying to the upside here. We could probably talk nat gas and energy for the rest of the show, Mr. Dan, but you are our guest. The world is your oyster. Where should we head next, sir?
Well, let's see. Let's do this. Let's talk about metals, shall we? How about like gold, silver, copper, any of those markets?
You know, because you asked so nicely, I think we can make that happen, listeners. Let's head out into metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
That drop always brings a smile to my face. Werewolves beware. Welcome to the metals, listeners. You know where to find these. Go back to that drop down, bump on out of energy, go into the asset classes, scroll down a little bit till you get to metals. Then we're going to hang out in the precious first. Mr. Dan, sir, what is lighting up your tape in the world of metals this week, sir?
Well, one of the ones I find interesting is silver. And what's interesting about silver is how it's leading to precious metals. It's the price action that we've seen for the last 3 days, so including today. It's really refreshing to see this kind of movement. The problem that the precious metals have had for the last couple months, I believe, is that it's been struggling. It's trying to figure out, do we go up? Do we go down? The bias is for a move higher, but we just never saw the paper behind it. Now, silver, I believe, is leading that precious metals complex. Platinum is also off to the races, as you mentioned earlier. But I think silver fascinates me the most. We have seen this before, where silver leads this complex. So if you look at gold, the expectation is gold. But you got to be careful with that, because the silver really could give us the price action that you're looking for. Gold's kind of catching up as opposed to leading the way like we're seeing with silver.
You know, Dan, we just did our year in review show last week. We talked about all the different correlations we saw between the different products, both over the course of last year and since the start of the pandemic. And last year, you're right, silver was kind of on a lot of people's radar. There was talk of a silver squeeze, as ridiculous as that was earlier in the year. So a lot of people were starting to get interested in silver last year. We ended up seeing for the year about 75% positive correlation of silver to gold. You've been watching these markets for a while. How does that stack up to you versus historical, sir?
Well, I do think it has that kind of rhythm. You know, people somewhat discount it. Now, silver, they both have industrial applications. They both have jewelry application. 70% of gold goes into jewelry, for example. That's predominant use there. Silver a little bit broader in terms of its application. in terms of use, but they do have a tendency to march to the same beat of the drum because people say, okay, I want some precious metals in my portfolio. Well, those are the two products that they're typically going to go after, gold being the number one. But I really do think silver is one you want to watch when it comes to precious metals for that action. So your 75% correlation, I think, is reasonable when you think about those two products.
Let's see if the paper and the action in silver this week is reasonable. Like we said, the metals, one of the few areas where the vol was creeping up this week, and we also saw some upside price action. Silver getting a nice lift this week, up 7.5% just since Monday. So quite the bounce, quite the rebound in silver. At about a 24.63 kicking off showtime. That's in that front contract that's going out in about a day. You go out about a week, it's about the same level, 24.63 out there. In terms of vol, what are we seeing in a silver vol right now? Let's go out a little bit. Let's see. The contract that has 6 days to go. the Feb contract did about 30% of the paper this week. So we may have to hang out there, even though we don't like going that close to home. Tell you what, we'll go a little bit farther out to March. That is 33 days to go. And that did 28% of the paper. So it wasn't like that was a sleepy week. By the way, in terms of action, a pretty active week, 31,000 contracts. Usually silver is good for 22, 25,000. So that's a pretty robust week for silver. And nearly 30% of that, 28% of that going up in the March contract. The vol out there, nearly 25, about 24.94, up about 1 3/4 points this week. So again, the vol creeping up out there in the metals. Let's look at the skew out here. Last week, the puts, 3.2% cheap. Nobody wanted them this week. 2.3% bid. So puts getting bid up a little bit this week. The calls last week, 4.1% rich. I can see why you wanted to have those calls on before this pop this week. This week, they're down to 2.4% rich. And in terms of the action, the most active contract out here this week, listeners, was the 25 even calls. Again, not that surprising. It's pretty much the near at the money strike now. Doing about 1,600 contracts, the big day today, 600. Monday, I should say Tuesday, 500. Wednesday, about 450 out there. So that's the leading the dance. And then we got, let's see, behind that, we've got the 24 calls going out in the Feb contract in about 6 days. They did about 1,000 contracts this week. And since we're talking precious, let's switch over really quickly into the gold side of the complex as well. Let's go into that drop down, pop out from silver, go one up into gold. You'll see coming into showtime at about an 1840, up about 1.3%, or about a little over 24 handles on the week. Gold, how much paper is gold doing this week? Still kind of light. Again, everything's light this week. So take that silver number. That's even more impressive when you think about the fact that we had a truncated trading week this week. But gold, about 207,000 contracts on the tape this week. The lion's share of that, again, the Feb contract going out in about 6 days, doing 29% of the paper. So let's go a little bit farther out to March. 34 days for that contract. That has about 23, almost 24% of the paper. The vol in gold, obviously a lot less. 1261. It's kind of unched on the week. So a little bit of a bid to the nearer dated contracts that are going out in the weeklies. You get a little bit farther out to March. The vol is kind of flat. In terms of skew, we said the puts last week, 2% bid. This week, 2.7% bid. And the calls last week, 1.5% bid. And this week, 3.2% bid. So a little bit of call love creeping up there in the skew, but nothing tremendous. And in terms of action, it's the 18.5 calls, listeners, slightly out of the money calls. That strike was leading the dance across the board. In the Feb contract, we saw 10,300 of the 18.5 calls going up this week. We also saw 18.5 calls trading in March, 6,000 of those trading. We also saw them trading in May, 1,300, all the way across the board. 18.5 calls was the strike du jour. Let's see what else is lighting it up here this week. Really quickly, let's go out. 18 halves were hot this week. We also saw 1,800 puts, 7,500 of those. These are going away in February. And these are going, let's see, these are 1,800 puts expiring in February, doing 7,500 contracts. The big day, pretty much all of them was on Wednesday, 5,600 on Wednesday, 1,200 on Tuesday, and only 600 today. So Dan, anything catching your eye out there in the world of gold this week, sir?
Well, gold is, I don't want to say lackluster, but gold also had that bullish bias. But, if you look at silver took off 2 days ago, really, or 1 day ago. Gold didn't do anything that day. And so what we're seeing yesterday, gold did firm up. Today's kind of a rest day. It's doing just fine. But if you look at silver, it still has a lot more volatility. It's still more aggressive to the upside. Gold, on the other hand, I think the bias is for move to the upside. The perception is higher prices. But to me, if we get above 18 and a half, that level you were just talking about, then you don't want to see it closing at 18 and a half. If it gets above 18 and a half, you want to see it closing around 1880, 1890. That would imply follow through. If we kiss 18 and a half and back off, close lower than that, that really to me implies a sideways move. So I wouldn't look for strong follow through. And think that silver is the guiding light here for this gold market. Gold just, it's stepping in the right direction. And today's action's fine. But the next 2 days, Mark, I think are going to be important. If buyers are really here, if that paper's coming to the market, then we should be closing near that 1860 by the close of the week, which is tomorrow.
And let's keep on rolling, listeners. Out of energy, it's that time, listeners. It is time to talk some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the world of equities. You guys know where to go. Go back to that asset class, drop down, pop out of metals, go up into equities, and head on over. We're going to start in small caps. Before we get there, of course, if we're talking about equities, we have to talk about the flip side of that coin, which is market volatility. And again, from this time last week, we're seeing equity vol ticking back up as well. RVX threatening a 30 right now, at about a 29.32 when we kicked off the show here this week. So that puts it up almost exactly 4 points on the week, 396 from this time last week, listeners. So yeah, impressive levels out there. Looks like we got to 30 briefly this morning. We got up to about, it looks like about almost 30 and a half earlier this morning. So we did hit a 30 again, which is a serious level there for the small caps. VIX again north of the 20 handle, actually about almost 22 and a quarter when we kicked off the show. That puts it up about 3.5 points from this time last week. VVIX, the vol at about a 123 and a quarter. That's getting back up there again. That's up 5.7 points from this time last week. And vol Q, aka the at the money vol of the NASDAQ 100, at about a 25 even when we kicked off the show. It's up about 3 points from this time last week. That means our VIX to RVX spread getting a little bit wider again, about half a point wider to a little north of 7, about 7.1 points on the small cap to large cap vol spread. And the NASDAQ to S&P vol spread, so VIX to vol Q, again, not quite apples to apples, because obviously you have a skew component in VIX that doesn't exist in vol Q, but you're at nearly a 3, about a 2.83, so about a half a point tighter than it was this time last week. Mr. Dan, a lot going on in the world of equities. We're seeing vol creeping up again this week. We were selling off earlier in the week, then rallying today. What's catching your eye out there in the world of equities and volatility this week, sir?
What's disturbing to me right now for the S&P, NASDAQ, Dow, and the Russell is the lack of follow-through so far today. And we had some fundamentals to kind of stimulate this market. What I do find interesting is this past week, what did you and I hear about? We heard, oh my gosh, the Fed's going to be doing something with interest rates. And well, they have telegraphed that. Yes, that they said, intention is in March. We're going to be doing something. That's March. So if the market is reacting to that now, is it reacting to a concern, which is the word we hear, or is it reacting to reality? Well, to me, it's a concern. They haven't done anything yet, although it looks like they're going to. So when I see a market moving on concerns, I don't look for a dramatic move to be sustainable, if indeed that's the case. I mean, fundamentals, well, we've had some things coming out this week that haven't been necessarily terrible. Before today, the 33 S&P companies, S&P 500 companies that have reported, 70% have beaten their expectations. Housing starts are up. Housing permits are up. Today we found existing home sales were down, actually. But housing says something about people's intent. Are they willing to make a dollar commitment? Are they willing to make that capital equipment uh, commitment for a fairly large expenditure? And it looks like they are. So they have money and they're willing to spend it. And it could be in the anticipation of what the Fed may do. So I think we're seeing some fundamentals that really would support a stronger market from my point of view. Initial job claims that came out today at 286,000. It's a 3-month high. They were expecting 220,000. So we're seeing a job market that still remains tight. We have some economic numbers that have been coming out that I don't think look that bad. So I'm not bearish on our stock indices. Although today, with the rallies that we saw, they all went through what I consider bullish or buy levels, and they're failing right now. But I'd be cautious here. When you see this kind of price action where we firmed up early and now we're week late, what you don't want to see if you're on the short side is you don't want to see us trading in the S&P, for example, above 4,600, because that would imply we should get a push. And then we'd look for 4620 to 4630 if we would see that kind of price action. Today's behavior, where we rally and then we break, like we're doing right now, if we close here, that's what I call a false sense of security. So for Friday's action, you want to see sellers maintaining control. You want an unchanged, a slightly lower movement. You don't want a rally going into the weekend. For the NASDAQ market, you don't want to be above that 15,350. For the Dow, 35,400. You don't want to be back up in that range. For our friend, the Russell, 2110. You wouldn't want to be back at that range. Now, that's if you're on the short side. If you're looking at on the long side, the possibility of a rally going into next week, then you'd want to see those levels. Because I think it also tells us something else, Mark. What's fascinating is tomorrow's Friday. I love Fridays because Fridays force people to make a decision. Because the market will be closed. These markets don't open again till 5 o'clock Chicago time on Sunday night, which is Monday morning in Asia. So do people want to go home short these indices into the weekend? We have weaker closes tomorrow, then the answer is yes. If, on the other hand, we have a rally as we go into the weekend, like to the levels that we were talking about, that would imply one of two things. One, the people who've been selling it this past week buy it back to take some profit. Two, it's gotten cheap enough that buyers are coming into the market. Now, next Monday, from my point of view, if indeed it's the first case that sellers bought it back to take profits, we would see an unchanged or lower day on Monday. So sellers return. If it's the latter, where buyers now have entered the market because it's cheap, well, we should see their footprints on Monday. You'd want a positive close on Monday, which would imply that we did get low enough to find those buyers. And then the second thing is, will it be sustainable after that, if indeed that happens? So the scenarios that we have that these markets are presenting us today, I think are really interesting. And there's a few different ways this could go. And I can't wait till Friday to see how it does end up.
Yeah, you're right. The markets, we haven't talked about this, but the market's turning a bit here, turning from green to red here. NASDAQ actually still red on the day. The others kind of bouncing out here. But let's get on out to small caps, putting up some numbers. Again, on a truncated week, we're already seeing about 25,000 contracts on the tape for the Russell 2000, which is usually a decent week's worth of volume, only going up in just a handful of days out here. So obviously things are popping off. Russell 2000 net on the week is off 105 points, or about almost 5% just since Monday. So again, a big turnaround here to the dark side for all things small caps. Still north of the 2,000 level. If this continues, by next week's show, it won't be the case. Let's go out here to see, of course, as of most equities, 37% of that's going up in the contract that expires in, in 1 day, 37% of that contract, of that paper going up there. So let's go a little bit farther out. Let's go to the week 3 Feb contract that has about 29 days to go. And that did about 14% of the paper. The vol out there, if you're wondering, 28.5 listeners, up 5.1 points this week. Skew-wise, we're talking a decent bid for the puts, even if not quite as aggressive as it has been. 14.7% bid last week. This week, 15.5% bid. Last week, the calls, nobody wanted them, 12.4% cheap. They want them even less this week, 12.8% cheap. And in terms of the action out here, what was the number one trade? It was now in the money puts, 2,100 puts leading the dance with about 500 contracts out there. Actually, I take it back, 22 half calls going up in the Feb end of month contract that did about 1,200 of these. So 22 halves, again, substantially out of the money. I guess you can call these smaller delta calls. People are always asking about small delta calls in Russell 2000. They're pretty active. Looks like maybe a 2,200, 22 half vertical going up 400 times on Tuesday, I should say, and then 700 more times on Wednesday. So a total of about 1,100. So an active vertical going up both those days. That's kind of interesting. And its opening looks like on both. So there's no roll there. It's not a roll down. So opening verticals here in all things small caps. Interesting. We can spend more time on all things equities, but I want to get some of you guys on the show as well. So without further ado, let's head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it. We have some questions you folks sent in. Also have our questions of the week. But of course, we want to go out to our Secret Club friends out there first. We got our buddy here, Mr. Luigi. He says he was very happy, Dan. He says he was happy to hear that you were back on the show today because he's diving and taking another stab again at futures options, in particular the E-minis and crudes. And he says he has a question for you. He says he listens to your YouTube market analysis, which if you're going to dangramza.com, you're not checking those out listening. You should be checking them out. Luigi says he goes and listens to your YouTube market analysis, and he cannot wrap his head around what you mean when you talk about the dollar difference per contract. He thinks he understands everything else. So, Dan, when you're out there doing your epic YouTube videos, Luigi is confused by your dollar differences per contract, sir. Can you clarify it for him?
Well, let me think here what he means by a dollar difference. Oh, no, I think I know what he means. And that is this. If you look at dangramza.com or on YouTube, on my daily video there, and it's free, what I show are red and green lines. And I call them bullish and bearish levels, but they represent buy and sell levels from my point of view. I am not making buy and sell recommendations because I don't know who's watching these, and it's watching over 150 countries. But what I want to share is how I would approach these markets. So that green level would represent a buy level. And let's say we bought it at 20 and we had a red line up at 40. So that means this market, if it trades below 40, it would exit a long position at 20. So the dollar difference, the magnitude difference in that case would be 20. So when I say dollar difference, and thank you for asking about this, I'm talking about the profit that would have occurred on that trade. So I think we had a Bitcoin trade not that long ago that was $16,500. The concept is if you would have bought it at that level and sold it at a certain level, that would be the amount of money that would be generated. And if someone's not familiar with futures, I just wanted to share what the dollar value is between those buy and sell levels. So that's what I'm trying to convey. but I can see where it could be confusing with the way I say it, which is a dollar difference. So thank you for asking that. And I hope that does clarify what I'm trying to do with that.
Well, let us know if that clarifies things for you, Luigi. By the way, we got Age of Delaquarius also in the chat. People like asking you questions, Dan. They say he wants to know, is there really a wedding season in India that influences the price of gold in certain months, or is that just more gold bug talk? So we all know the gold bugs, they can get a little out there sometimes, Dan. What are your thoughts on wedding season in India? We've all heard that one.
Well, you're right. And gold is such an important store of wealth in India for generations. So, and in fact, I was there. I was just talking about this earlier. I was there a few years ago in Mumbai. Actually, they have in Mumbai, they have about 4 buildings. It's their diamond cutting center. There's about 2,500 family-owned businesses that cut and polish diamonds. About 80% of the cut and polished diamonds come out of India. And gold is a big part of that industry as well, too. It's important to have that as a sign of wealth, to be able to have some gold. So that demand, yes, it could go up. But I think it's important that we keep in mind what else has happened in the industry. To expect it to march to the beat of the drum on a consistent basis for the wedding situation in India, I don't know if that's going to be big enough to have an impact consistently on gold, because it could be reacting to other areas as well, too. When it comes to gold, it's not only the jewelry that we think about, like in India for the wedding season, but it's also what central banks are doing. If you look at especially developing economies, the central bank consumption of gold has actually been fairly consistent, and it's high. It's kind of under the radar in a way. And if you think about it, why does a central bank have gold? For what? What's backed? What currency backs gold? Or what currency is backed by gold? None. The last one, I think, was 1999, and that was our friends in Switzerland. So why does the central bank have gold? And I think that is something to watch. The accumulation you see there is a conception of value when it comes to gold, and I think it's represented there. I remember being at the Bundesbank a few years ago, not for work, but just to visit with some people I know there, one fellow's an economist, and we talked about that. The Bundesbank has gold. Why? And how much? How much is enough to feel like things are okay? And there's other actions that can have an impact on gold besides the India wedding season. And it's something to look at. The weddings in India are truly amazing. They are truly amazing. They're, in the United States, we have it for a few hours. There, they have it for a few days. And the invitations, to me, look like a book. They're not just a fold over piece of paper. It's truly an amazing thing. And I was invited to a wedding, and unfortunately, I couldn't make it because I had to catch a plane. But it is a happening thing in India. But again, going back to that, is it consistent enough? And what else is happening in the environment for the gold market to say that, yes, we can count on that being a big part of consumption during that season?
There you go. Hope that answers your question, Age. By the way, Dan, Luigi says you helped him immensely with your answer. So there you go. Dan, you hit on the right thing. There you go, listeners. Get those questions in if you want to get them live. Of course, you know where to go. TheOptionsInsider.com/secret club. All right, listeners. That music means we've come to the end. Man, this show sometimes could be 5 hours long. There's so much going on. We could do a whole hour on ags. We could do a whole hour on probably metals. Definitely a whole hour on equities. A whole hour certainly on the nuances of the mysteries of energy right now. Unfortunately, we have to condense it all sometimes. So good stuff. Mr. Dan, you did an able job filling in both hot seats today. So before we go, we kind of just talked about your YouTube videos. If folks want to check them out, or maybe they have more questions for you, where should they go? What should they do?
Well, they could go to dangramza.com, and there is a free video. It's the one you would see on YouTube, but it's a free video. There's a video there, there's a course, and there's a more advanced video, but check out the free one if you're interested in that. If you've never traded futures, a place to begin is watch them. See what that volatility is like that you hear Mark and I talking about. Is it consistent? What are the clues? And how does it compare maybe to the equity market you look at? Or if you're a trader that trades, let's say, the equity indices in futures, but you don't really look at other complexes. I covered 22 markets, 6 different sectors, stock indexes, currencies, interest rates, metals, energy, and agricultural markets. There may be another market complex that you find interesting. So that's a place maybe I think to begin your journey. If you're not trading futures, is just dangramza.com, free video. If you have any questions, you can send those in there.
We have a hard time fitting it all into an hour showdown. I don't know how you squeeze it into your videos, all those markets, but check them out if you're not listeners. Dan Gramza, GRAMZA.com is the place to go. If you like stuff like this and listening to a show like this, I have to assume that you do. You'd be well served to check those out. The folks in the chat sure like you, Dan. They're saying, hey, Russell Rhodes, Dr. Vicks, he's okay. But Dan Gramza, they're saying you're the man, sir. So you get a lot of love today in the chat, Dan. Clearly a few watchers of your videos are lurking in our chat today. Check them out, listeners. DanGramza.com is the place to go. You know where to go to get all of our reports and everything else we got cooking up here on the show today. CMEGroup.com/TWIFO or /TWIO. Both of those should work. They are case sensitive, so bear that in mind when you're putting that in there. You do capital TWIO or TWIFO, it's going to break for some reason. But TWIFO or TWIO will get you to all those reports. They run all week long, all completely free. And then, of course, you know where to go to learn more about all things small caps. What's up with this sell-off? What's the impact of COVID on all these small caps and a whole bunch more? At FTSE Russell on Twitter and FTSERussell.com are the two places to go to learn more. And given the action out there and the level of vol, we broke through a 30 again in RVX. I got a feeling everyone out there who's wringing their hands wants a little bit more vol. You do worse than checking out some small caps out there right now. FTSERussell.com is the place to go to learn more. We got to get on out of here, but we'll be back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And right after that at 2 p.m. Central, 3 p.m. Eastern for all you cool kids in the secret club. We'll see if we can hold the Rock Lobster's feet to the fire, see if he actually bought some of those calls he was raving about on the option block in that little biotech. We'll find out, and a whole bunch more. Then we're back again next week. It's a regular week, no holiday week next week, all the way through to another Thursday, another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.